that it would increase its loan book to 5 times the amount of 2012.
So will it be easier to get a mortgage, household loan or even a small business loan? Well, personal finance expert Karl Deeter from advisors.ie joins us now. Well, Karl, sounds great, but please forgive me for sounding a little bit sceptical about this. I'm sure you'll be in that same camp to some degree as well, that this is going to open the floodgates and we'll all be awash with cash again.
Yeah, it's kind of more a case that permanent TSB have gone from being in the palliative care unit to the ICU. Like, they never should have lent as little money as they did last year and still be able to call themselves a bank. Certainly not a functional bank. What I would say though is that they went into 2012, they had a new CEO, they had huge problems, and they said, okay, we're going to shut the doors and we're just going to fix our problems in-house. They hived off a huge amount of lending, about €11 billion, into what's called the asset management unit. These are loans with problems or that they can't make money on, and they're going to manage that separately and get back to doing the business that they should be doing, which is car loans, personal loans and housing finance.
At what state would its balance sheet be in now overall, the bank?
It still has operational issues that are going to affect its profitability in the future. What they did do though quite early on was actually jack up interest rates. It was hugely unpopular, but it was what should have been done at the time, and it was a difficult decision and everyone hated them for it, but they actually reacted the right way, and I think that they do have a viable future as the third bank. Now last year when they say they lent 90 million, really I think about 65 million of that was in mortgage finance, and the remainder was everything else. When they're talking about the 450, that's a big ramping up. But if you look at what it is versus the mortgage portion, if we assume that greater than 400 million will go on mortgages, it's a really impressive return to the market. And not only that, but they're going to do it at a fairly decent rate. I think around 4.25% is going to be what they'll be charging, and that is nowadays a respectable mortgage rate. And what I do know from the broker side of our business is that there used to be only one person serving every broker in the country, and they've increased the staff numbers there to 5 and 6, which doesn't seem massive, but bearing in mind where they came from, they're actually putting people in the unit that will help do this lending. So they're not just saying this and releasing a press release, they functionally have the team there and it's ready to go. So I think it's a good sign, and in particular they're going to have a focus on what I would call affordability lending. So
first-time buyers, will they be, who will they be going after with this, or is there going to be any limitations on who can get it?
They'll do 90%, so that is standard first-time buyer, because first-time buyers typically don't find it easy to save up a deposit. But the thing that they're looking at doing is, instead of saying, oh, it's going to be 4 times income or 3 times income, they're going to look at what you can actually afford. And if you can prove that you've been saving $1,400 a month for the last year, then they'll consider giving you a mortgage that would cost $1,400 a month. After they put it through the various stress tests. And that's kind of a better way of doing it, that rather than saying we have this model for saying whether a loan works or not, is to actually look at what the person does, see the proof on the paper. And I think that's a positive sign. Because
will people still have to jump through the usual hoops though to get mortgage approval?
That's just life in modern Ireland. What we had in the past was an absence of hoops, and now we've probably gone the opposite direction, to where you really run the full gauntlet in order to get a loan. But what isn't happening is what happened last year, where their answer is no to everything. We're effectively not lending. What they're saying is, yes, we are lending, we have criteria, but there is actually money there, and it's already been pre-allocated, which means it's probably likely to get used up.
Yeah, and you are confident that this will happen, because we've heard this before from other financial institutions. We put X aside amount even for small business loans, and then the business, anecdotally, the business community is saying, well, the shutters have come down, the banks still aren't lending no matter what they say. Yeah,
well, I suppose I traditionally would be of the view that you can tell bankers are lying when their lips move. And that's maybe a bit of an overly negative way of viewing it. But, and it is a big but, this money is already allocated. So it's actually up to people to apply for it. And if they have a criteria that the people moving the loans are aware of, if you fit the criteria, you'll get the loan. When it comes to mortgages, most of the banks actually do lend the amount that they're talking about, with the exception of Bank of Ireland, who came out and said, oh, we're going to approve all these loans. But a Bank of Ireland approval, you can't really close on their mortgage offers, because they give you an offer, but it has all these terms and conditions that are hard to meet. So they came up with all these offers, and then they said, oh, it's the borrower's fault because they're not drawing down. No, it's actually the bank's fault, because you're giving them a paper saying you can borrow this money, but it's with conditions that you couldn't ever complete on. So
well, all in all, Karl, it's a good sign that more properties are going to shift hopefully this year. It's a shot in the arm for the property market.
Yeah, the property market, I suppose, there's a lot of things that are going to happen this year that people are curious about. Will there be more transactions? There was more transactions last year than the year before. The supply of houses in Dublin, for instance, just to give an example of the city, is between 0.9% and 1.5% is what's available for sale of second-hand houses at any given time. In a normal city, that would be more like 3 or 4%. And that's why we're actually seeing house prices rise. We saw them rise, over 2% in November. And probably the same again will happen in December. And people say that's due to tax relief at source ending. I don't know that that's necessarily true.
But it is concentrated only in small pockets, though, as well.
But that's on a general Dublin index.
Yeah.
And the thing that we saw this year, which I was surprised when I went back to work, is that the inquiries that came in over Christmas never stood a chance of getting a mortgage and being able to get tax relief. But we got something like 30 mortgage inquiries between the 22nd and the 28th. And that just never happens.
Yeah. Traditionally a very quiet time as well.
We even got mortgage inquiries on Christmas Day. I don't know who was sad enough to actually think about this stuff. I mean, I live, eat, and die mortgages, and I don't even think about them on Christmas Day.
But the only thing is, the banks still aren't negotiating. When there are people out there who can't afford their mortgages and want out of their properties, and the banks aren't letting them go. They're not doing deals, so the supply can't, reach demand.
True. And I suppose that's why you saw before Christmas that the IMF were saying we want to have that loophole closed so that banks can repossess houses, because at the moment you've got people in houses that there's 10,000 mortgage accounts where people haven't paid anything in 2 years. Now, whatever about your views on the way the world should be, I think that even the most socially responsible person would say that it's somewhat wrong to have someone in a house that they've bought and haven't paid a penny in 2 years. They need some other alternative.
Yeah.
They actually need an intervention rather than have more interest piling on top.
Just away from the mortgage, the property market, Karl, they're talking about lending personal loans, car loans, loans to do up your house, buy a new suite of furniture. I suppose that is all good to get a bit more money in circulation, to get the retail things bumped up a bit as well.
It helps, certainly does. And when it comes to cars, some of the lenders, for instance, won't let you buy a car that's more than 5 years old. The permanent TSB product that they're talking about, if you want to buy a car from 1991, that's your choice. And if you think about it in that respect, it's giving people credit for what they actually want and what they can afford, rather than saying there's this benchmark that unless you buy a car from 2008 or onwards, that the car finance isn't really accessible to you. So that's for me, these are all positive things. And an economy is slow to turn, and it's kind of like sitting on an iceberg and waiting for the sun to come up. Sometimes it seems like it goes on forever, but it does. And one of the things the banks know is that if they don't release credit, they're actually going to hold the economy back. And a vibrant economy is not only key to saving the nation, it's also key to them saving themselves. So they're finally getting into the mode of thinking that they should have been in 3 years ago.
Karl, can I just ask you finally, do you think it's good that the property tax is going to be, the revenue are going to decide how much each house is worth?
Well, somebody has to do it, and they're the tax authority, and if they're going to be the ones levying it, they may as well send you out your valuation. The good news is, though, because they're going to get lots of them wrong, we know that, that if they give you a valuation you don't agree with, you can just send in a counter valuation. They'll accept it. You don't have to fight with them. There's not going to be a big hullabaloo. You hear people saying, oh, revenue are going to make a mess of this. That's ridiculous. Send in whatever valuation you want. What I would say is,
but
if you lie on it,
it can't be just picked out of the air. It will have to be backed up by...
If you lie on it and they catch you, you're going to get shafted. And that's the way it works, always has. So you're not going to be forced into a valuation. You can tell them whatever value you want. There's a way of doing that. There's an alternative to what's called a default evaluation. But just, please, don't lie about it. Just tell the truth, suck it up. If you get caught,
good
it's
advice.
not going to be nice.
Okay, Karl, as ever, thanks for scaring us. Talk to you again after the break. Could mobile phone apps and online shopping make supermarkets a thing of the past? We'll be discussing that in just a few minutes. Don't go away.
Don't tell Mom. Don't tell Mom.
Don't tell Mom!
Don't tell Mom.
Don't tell Mom! Don't tell Mom! Don't tell